2025, a year of market shifts and big opportunities. What if I told you that right now could be one of the biggest wealth-building opportunities of the decade? The stock market is full of fear and uncertainty, but history has shown that moments like these create millionaires if you know where to invest. In today's video, I'm revealing 5 powerful stocks I'm aggressively buying in 2025. These aren't just random picks, these are companies with massive upside, positioned for explosive growth in sectors like AI, tech, and finance. But here's the twist. I'm ranking them from lowest risk to highest risk. You'll see which stocks are the safest long-term bets and which ones carry more risk but could deliver life-changing returns. Make sure you watch all the way through, because at the end, I'll be sharing a stock that reminds me of investing in Apple in the 1970s, a company that could be at the very beginning of something huge. If you're serious about building wealth and making smart investments, this is a video you cannot afford to skip. So hit that like button, subscribe if you haven't already, and let's jump right in. This year kicked off with instability, new leadership in office, fresh trade disputes, inflation still unpredictable, and overall, a lot of market uncertainty. But even in chaos, golden opportunities exist. Stock 1, a market titan that stays strong. First on my list is my biggest individual stock holding, one I've been accumulating for years. While most stocks have been struggling, this one remains steady and continues growing, thanks to an investing legend at the helm. I'm talking about Berkshire Hathaway, a powerhouse run by Warren Buffett since the 1960s. The company owns a diverse mix of businesses and holds major stakes in leading publicly traded companies, including Apple. One of its biggest advantages, a massive cash reserve, ready to be deployed when Buffett spots undervalued opportunities. Over the past year, Berkshire Hathaway has beaten the S&P 500 by 9.45%, and over the last 2 decades, it has outperformed the index by 352%. Currently, Berkshire Hathaway's Class B shares, BRK.B, are priced around $493, with strong buy ratings from analysts. Berkshire Hathaway, a financial titan, valued at over $1 trillion with an impressive P/E ratio of 10. Concerns about Warren Buffett's eventual departure are common, but he's spent over a decade training his successors. The company's leadership transition is well planned, ensuring long-term stability and growth. AI, a game-changing sector. Tech giants like Nvidia, Apple, and Microsoft have soared thanks to AI advancements. AI investments continue to offer strong long-term potential. Microsoft, leading the AI revolution. A pioneer in AI thanks to its early investment in OpenAI, creators of ChatGPT. AI is now deeply integrated across Microsoft's ecosystem, driving massive growth. Upcoming breakthrough, Microsoft's Majorana One chip, built for quantum computing, could reshape problem-solving on an entirely new level. Microsoft, a leader in AI and quantum innovation, revolutionizing quantum computing with the Majorana One chip, designed to solve complex problems at unprecedented speeds. Projected revenue growth, 13.1% in 2025, increasing to 14% in 2026. Earnings per share, EPS, expected to reach $13.6, reflecting an 11.5% rise from 2024. Stock price, currently trading near $396, with a market valuation close to $3 trillion. P/E ratio 32, making it undervalued for a company of this scale. Next up, a tech giant trading at a discount. Alphabet, Google, is now priced at $173, down 10% in the last month. P/E ratio 22, exceptionally low for a $2 trillion plus market leader. Why Google remains dominant. 75% market share in global search, 85% dominance in mobile search. Online search is continuing to expand, fueling long-term revenue growth. Why Google's stock has dropped. Recent decline driven by ongoing legal challenges and concerns that AI tools like ChatGPT could disrupt its search business. Google's regulatory battles and AI expansion. Regulatory pressure. The US Justice Department is pushing for Alphabet's breakup, potentially forcing it to divest Chrome and Android. Company response: Google argues this would harm both the US economy and national security and has been lobbying against it. Potential outcome? Likely a fine or partial divestment, but Alphabet's core business will remain strong and cash flow will keep surging. Google's AI evolution and market edge. AI competition. Concerns about ChatGPT overtaking Google search are overblown. Google has the resources to compete. New AI-powered shopping feature, Vision Match, allows users to describe any clothing item and generates AI-based shopping suggestions. Alphabet's future, owns Google, YouTube, and multiple high-growth businesses, continues to expand while the stock remains undervalued. Investment strategy, while others pull back, I'm buying aggressively because this is when smart investors take advantage. Next, pick a high-risk, high-reward AI play. This company relies on government contracts for half of its revenue, with the other half coming from corporate clients. Provides essential AI-driven solutions that businesses of all sizes need. The company, Palantir. And with the AI investment wave just beginning, it has massive potential. AI investments are exploding. In just one quarter, companies have committed over $325 billion to AI, and that's just for 2025. Apple alone has announced a staggering $500 billion AI investment over the next 4 years, while a significant chunk of that will go to chip makers like NVIDIA, which produce the powerful GPUs driving AI applications. There's still a massive opportunity for AI software platforms like Palantir AIP to benefit. But the real game changer? The moment when small and mid-sized businesses begin integrating AI into their operations. That's when AI software could truly explode in demand. Palantir's platform has the potential to revolutionize industries traditionally run by smaller businesses like construction, real estate, and retail by improving efficiency in ways we haven't seen before. Palantir, big potential, big risks. As promising as this all sounds, there's one major downside. Palantir's valuation is through the roof. Right now, the stock is trading at around $81, but it's dropped 10% in just one day, making this a rare discount. Even though the company itself is financially solid, analysts still consider it overvalued based on traditional metrics. Take a look at these numbers. Its P/E ratio is a sky-high 400, its price-to-book ratio is over 38, and fair value estimates place the stock at around $46.50. Which is almost half of its current price. This means Palantir is expensive, and that makes it high risk. But here's the thing, high risk often means high reward. I see two possible outcomes here. This stock could skyrocket past $500, or it could plunge back down to $40. And personally, I believe in its long-term growth, and I'm betting on the upside. Next up, a hidden gem on a dip. This next stock is one I started buying in 2025, and it's a company I've been watching for a long time. Since the start of the year, it's seen a noticeable drop in price, and I've been waiting for this opportunity. For years, this stock has been hyped up by analysts, bloggers, and YouTubers, and while I always loved the company, I just couldn't justify the valuation. But now, with the stock finally coming down to a price I like, I'm jumping in. A rare opportunity, like owning Apple in its early days. Putting money into this company today feels like backing Apple in 1976, when they introduced the Apple I, or perhaps in 1984, when the Macintosh debuted. Back then, few could predict that Apple would eventually dominate the tech world. Every industry leader starts somewhere, and those who recognize the potential early often see life-changing returns. This company isn't brand new, but it's only beginning to tap into its full potential. That business is Sofi. Sofi, a financial powerhouse in the making. While many view Sofi as just another bank, it's actually a multifaceted financial institution that goes far beyond traditional banking. Their services include education loans, personal financing, mortgages and refinancing options, debt consolidation, business funding and tailored lending solutions, full-scale investing services, insurance products and retirement planning. Sofi's business model is simple yet powerful. Capture younger consumers, particularly millennials and Gen Z, with a tech-driven, cost-effective platform and retain them for life. Once a customer joins, Sofi becomes their go-to financial hub, handling everything from their first loan to long-term investment planning and retirement needs. Massive expansion, yet still in its early stages. Since its public market debut in 2021, Sofi's membership has skyrocketed, climbing from 3.4 million to over 10 million users. What started as a specialized lending service has rapidly evolved into a comprehensive online banking platform. Despite this impressive growth, Sofi is still small when compared to industry giants. For reference, its total deposits account for just 1% of Bank of America's holdings. That signals tremendous growth potential, and as an investor, I see an opportunity to get in before the company reaches its full scale. An undervalued stock with game-changing potential. Right now, Sofi's stock has fallen more than 11% this year, currently trading at $12.50, with uncertainty in the financial markets keeping stock prices down. This is exactly the kind of moment long-term investors should take advantage of. If Sofi manages to achieve even a fraction of what I can anticipate, early shareholders in this stock are positioned for significant gains in the coming years. Keep strengthening your investment knowledge. This video is for educational and informational purposes only and should not be considered financial advice. I am not a financial advisor, so always do your own research and consult a professional before making any investment decisions. If you found this valuable, tap that like button, subscribe, and I will see you in the next video. Your journey to financial freedom continues, and I'm excited to be a part of it. Here's to your investing success. Profitable investing.